everyone, welcome back. You're still watching European Closing Bell. I'm Louisa Boyerson. Green, gold, and edible investments. Fantastic. That's the focus of Oppenheim & Co.'s new Gaia Opportunities Fund that invests around 5 key trends. Population growth, resource scarcity, environmental degradation, currency devaluation, and a power shift also from west to east. Well, Toby Birch, he is a managing director from Oppenheim & Co. and the manager also of the Gaia Opportunities Fund. He joins us in the studio along with our guest host Mark Tinker from AXA Framlington. Toby, so talk to me about this new fund. Why is it so special?
I think I've been very fortunate in the past to spot big picture trends before they kick in. About 10 years ago, I put clients into gold, and 5 years ago I wrote a book called The Final Crash, which is a forecast of the collapse in markets. So this time as a knock-on effect from that, I can see various mega trends coming, which again other people have seen as well, but this is the first time someone's put it into multi-assets rather than just equities.
Because I look through the research that you sent out, and it includes natural resources, food supply, energy, infrastructure, and health.
Absolutely.
Yeah. Why in particular these areas, and why are you staying away from, for example, oil and gas and some of these particular industries as well?
Well, this fund is designed to appeal to the particular pension fund trustees and green investors as well. We want to invest in clean energy, and it's not to be so preachy or to be holier than thou. It's because these sectors have really been beaten up. I mean, one of my favourite stocks is First Solar, which everyone hates. It's completely unloved, but when you look at the valuations involved and the kind of internet bubble and crash we've seen, this is a good time to be looking at these sort of stocks.
Toby, just on that, I mean, one of the things that some people are talking about is these solar, for example, where you've had demand is being accelerated with subsidy, and then supply has been accelerated even faster. So what the reason these stocks crash is it's very difficult for the stock company to make money out of it. But we end up a little bit like the railways. Nobody made money out of investing in the railways, but you end up with an infrastructure.
Absolutely.
Is it perhaps the case that there are a new wave of winners to come that aren't necessarily, so we don't buy the cheap ones that have crashed, we look for who's going to ride on the back of the infrastructure that's been built? Is that somewhere that you're looking as well?
I mean, I think it's hard for new entrants to come in because of the hurdles involved. It's really going to be a case, as always, of economies of scale. So the big players who've survived are the ones that we're going to back. And part of the reason why we like this sector so much is that you see this gradual decline in the production of solar power. It's still a long way off fossil fuels, but it's getting there. And eventually what we'll see is the dollar and other currencies devalue, real assets like oil will shoot up, and all of a sudden you'll get this tipping point where the likes of solar will be generally money makers. Personally, I don't like tariffs and subsidies because they distort markets, and I seem one of the few people who believes in free markets and letting price do its magic, because so often we get interference by central banks and governments manipulating equities or bonds or trying to force down the price of gold.
Yeah.
If we just let things be and let the price do the talking, then the money will flow to the right place.
But some would say that areas like solar, for an example, they're going to remain unloved areas and uninvested in areas as long as we're in the middle of a financial crisis, because people put their money elsewhere, or you don't want to take a chance on technology that hasn't been fully developed yet, or what have you. And also we're in the middle of the climate change talks taking place in Durban at the moment, and just to see, I mean, how little coverage they're getting in comparison to what they got in Copenhagen.
All last week going, where's the news?
Exactly, there is no news on it because there's so much focus on what's taking place in Europe at the moment. But so this is super long-term investment strategy then?
These are long-term trends, but you've still got to use charts and stop losses to get out of positions that don't work out. And it's also important why a lot of green funds have crashed badly in the last few years. You have to diversify across assets, and the latest acronym I've heard last week was CARBS. So you invest in Canada, Australia, Russia, Brazil. It's just another variation of the opposite of pig. So any sort of resource-rich country you're backing. So we're buying bonds and precious metals. We're not just stuck in that one sector.
Toby, thank you very much. Toby Birch, Managing Director from the Oppenheim & Co. Group and manager of the Gaia Opportunities Fund in particular. How are the U.S. markets trading today, though?